Can you trade GameStop with this one simple Hull Moving Average strategy? That's the question we're looking to answer in today's video. I'm going to be using the basic Hull Moving Average, and we'll be building a very simple backtester to determine is this strategy a worthwhile one inside of GameStop. Now I've started by copying and pasting all of the Hull Moving Average code. I'm going to click the Strategies tab to create a backtester, and there I'll click Create. Now inside of all of this backtester code, I'm going to delete the placeholder they give us and paste in our Hull Moving Average code instead. We can give this a name. I'll call it Hull Moving Average Backtester. And two input variables that we can add right off the bat would be our labels for either long entries or short entries. And this allows us to turn one off versus the other and get a little bit more accurate of a backtest. Now, once I've created these two input variables, which the user can turn on and off, the next thing we need to do is create the actual add order conditions using this HMA variable. That's the Hull Moving Average. Now, we're going to have two different triggers, a buy and a sell trigger. For our buy trigger, we can say our buy trigger is going to be equal to all of the times in which our Hull Moving Average shifts with the up color. That's going to be when our current Hull Moving Average is greater than the Hull Moving Average we had on the previous bar, meaning the values are increasing. Our sell trigger will be the exact opposite, which is going to be when our Hull Moving Average is less than or equal to the previous bar, and I'll close this out with a semicolon. Now that we have our buy and sell triggers, we can link them to the add order condition, which is what will tell thinkorswim when to buy versus when to sell. I'll say buy to open for our opening buy side order, and we'd like to open that whenever we have this buy trigger variable met and that value is true. The price we'll buy at is the closing price of the candle, and we can use a quantity of 1 just to simply get the P&L breakdown. Now we'll close this order out by saying order type. Instead of buy to open, this will now change to sell to close. And we'll simply sell this whenever that Hull Moving Average flips back to the bearish side. Now instead of just adding the buy trigger and the sell trigger, we can also link in our long entries variable here as a Boolean condition, which must also be true for any buy side orders to actually trigger. I can copy paste both of these lines and paste them one more time, this time changing all the buy to opens to sell to open and sell to close to buy to close, and reverse this for our short side. We're going to enter the trade when we have a sell trigger, and we're going to close the trade when we have a buy trigger. Now, if we simply take what we have here and we plot this out, we should have a very simple backtester, and we might not even need our Hull Moving Average here, which automatically will take the entry whenever that Hull Moving Average changes colors. It'll take the entry at the closing price of the candle in which that condition was met. Now, if we were to look at this on the 1 hour time frame, and I'm going back 180 days, which accounts for a lot of the period in which we didn't really have that volatility increase. So instead of that 1 hour, 180 day chart, let's change this to something much smaller, maybe just 15 days, to try and see how has the Hull been as a predictor of success and this trend changing in GME ever since this volatility has picked back up. Now using our P&L graph down here, we can very easily see that this strategy only worked well to catch this one larger long side entry. Otherwise, the Hull has flipped back and forth a lot of times, and on the net, your strategy has actually returned a negative P&L. Now, what happens if instead of this 1 hour time frame, you maybe ask yourself, well, what about the 15-minute time frame? Well, with the 15-minute time frame, all of a sudden, you see that you're able to get a little bit more precise, and this P&L graph looks a lot different compared to that 1 hour P&L graph with a lot more trade entries. You can, of course, dive deeper into this report if you'd like to analyze it a little bit further, trying to maybe splice and dice this data to see if there's a specific time when the Hull changes that it's more effective, maybe if it's during market hours versus our extended hour sessions. There's a lot of ways that you can take this data and dissect it to find some hidden strategies, making use of these reversals with the Hull Moving Average. We used a very simple exit here of using the Hull Moving Average changing colors for your exit, but you might even make these a little bit more sophisticated or at least a little bit more adaptive to price action by bringing in something like the momentum cross or some other oscillator which allows you to get out at the top of a trend. I hope you found this video useful. For those of you looking to just have some fun and test different ideas inside of thinkorswim, you noticed how in less than 5 minutes, we built a very simple backtester to quickly gauge how effective the Hull Moving Average has been inside of GME. Take care everyone, good luck trading, and I'll see you in our next update.